Hello and welcome onto the Market Musings podcast, where today our guest Angus Forrest, who is the Executive Chairman of Acuity Risk Management, is joining us. So thank you very much, Angus, for joining us on the podcast. The first time we're doing the Market Musings podcast. I know we've spoken quite a few times on Stockbox with regards to Acuity, but it's nice to have you on the podcast. How are things? How was your Christmas and New Year?
Well, good morning, Mark. Well, I had a nice break. It wasn't a complete break because whilst the business is improving, there's still an awful lot to do. So I didn't take off all the time between Christmas and New Year. And rather boringly, I did a bit of work between the two holidays, and to set us up for the start of 2024.
Well, there's nothing wrong with that. You know, when you've got a business and it's relatively new, yeah, there's no such thing as 9 to 5, is there, really?
There certainly isn't. And the more effort you put in, generally, the better the result. It's easy to think that luck plays a part, but actually luck is a reflection of the amount of work that you've done and put into the making things happen.
Yes, I agree completely. Okay, well, that's good then. So, I mean, well, before we get into talking about what's coming sort of down the pipe for Acuity and looking ahead for 2024, I wonder if we could get to know perhaps you a bit more and where you've come from. I mean, so risk management, for example, have you always been in that sector?
No, I've for the last 30 years, I've been in investment and making technology businesses work better. So I started in 1990, and the first one was a bit of a disaster, actually. Within 6 months of the investment going in, it looked as if it was going to go bust. However, determination and a bit of hard work, we produced a plan to rescue it, which required £50,000, by the way. And we put in £50,000, did a small CVA, which postponed paying a couple of creditors, and the business made more money the following year than it had made in its entire existence up until that point. It had been going for 5 years, so we felt pretty pleased, and it made more money the following year, and it carried on pretty happily for another 10 years until we sold out. So that was my start, and then I've been involved in a variety of mostly technical businesses, but I've been one or two others, and it's normally been how to improve, increase the quality of the business, make it work better financially, and give everybody who works for the business a good career, and something to be proud of.
Okay, I mean, it sounds, I don't know if it's similar. My uncle used to, well, that's what he retired a few years ago, but he started at Cable and Wireless and always sort of went and moved up and CFO, and then started to have various CEO roles at different telecoms companies around the world. So like Malta, for example, Macau, he ended up in Brunei, and effectively the same kind of idea. I think he would go in for a few years, try and turn the company around, perhaps rebrand it if it needed it, make it profitable, and then kind of move on. I mean, it's quite a nice kind of, career, isn't it, if you can make it work for you like that?
It's very satisfying, and I'm interested in business. So to make a business much more successful, or if it's unsuccessful, to make it successful, is really interesting and rewarding. In my plan is, and what I want to do, is to create a business where all the employees see that there's a career where they enjoy coming into work because they're achieving things, and it's going to be the standout job on their CV. So we've had several like that. One of note was Cybit, a telematics business, which we invested in 2000, at the end of 2000, and
Mm-hmm.
it had no business when we invested. We got the company onto the AIM market in 2001. We recruited a new chairman and a new chief executive. They started by doing a good job and winning some clients. We then assisted them to buy part of Traffic Master, and the business never looked back. Within 5 years of our investment, it was the number one operator in the UK. It was within another couple of years, it was in the top 10 in the world. It was profitable, and it was the fastest growing business of its type when it was bought by a US private equity business. And they put it together with a French company and built that for a bit, and it's now owned by Michelin Tires.
Okay.
And that gives me a real pleasure because everybody in the business did well. They've all got good careers. They've had good experience, and it's fantastic for everybody, really,
Mm-hmm. And
including the investors, not to be forgotten.
yeah, very important as well. Very important. So, I mean, was it a lot of tech you say you were involved in? And it seems like it was that sort of era where almost a dot-com era, so quite an exciting era for the tech industry.
It was a exciting period, and I think it's still an exciting period. There are lots of opportunities. I'm probably better at the use of tech rather than developing new tech. I think that's really where my skill goes, and the other area where I'm reasonably competent is recruitment of people.
Okay.
Because people make businesses, and that's how you create the goals, the teamwork, the leadership,
Mm-hmm.
the environment that creates the value and makes things happen.
Mm-hmm. Indeed. So that the first one you were involved in, it was sort of 1990, you say, and it was going to.
Well, the first one I started was in 1990. And then I had 3 or 4 other ones in the next 10 years, and
Okay.
from 2000, we made 17 investments, 13 were profitable, or break even, and some of those very profitable.
And you mentioned earlier, I mean, if we move on to sort of talking about things you've learned along the way there, it's quite clear that perhaps you learned along the way that employees and people in the businesses is very important. Did that take a while to kind of realize that?
No, I've always felt that employees were going to be the thing, the element that was going to make the business.
Mm-hmm.
The area where I probably have developed my skills are creating a vision and leadership and structure so that people know where they're going, what the objectives are, and how they fit into the picture. And if they won't fit into the picture, then they better think about where their future lies, because it may be better somewhere else, or they can change their mind and buy in, and make sure that they participate.
Indeed, I think that is important, though, isn't it, to articulate to employees that the vision, and almost, if you can, create a shared vision together with some of their personal ambitions, the ambitions of the management, but the ambitions of the company as a whole.
One of the businesses I went to was a company called Imaginatic, which was on AIM, and hadn't done very well financially. It had lost money for many years when I appeared, and the whole place was pretty dispirited. They didn't really have vision, and there didn't seem to be much leadership when I arrived. Anyway, the business had been for sale for more than 6 months when I arrived, and not one single bid had been received. Anyway, within 6 months, we had improved the financials of the business. We put in a bit of leadership, both overall leadership and in sales and marketing. And the business was on a growth path rather than a decline. And we had three, it may have been four, at least three buyers who expressed an interest. And the reason we sold the business rather than kept it, because you might think, well, actually, it's really not doing too badly, is I couldn't see how we could really grow that business. The two other companies, we were in the top three, and both of the other companies operated the same business model as us, and we couldn't get enough revenue for the input which we were providing to our customers. What it basically did was it took suggestions from and ideas put forward by employees, including management, and it assisted in putting those ideas into practice within the businesses. So there's basically a computerized suggestion book, but it did produce fantastic returns. One company, which was a pharmaceutical business, used it to reduce the time it took for developing and testing drugs. So they could reduce the time it took them to get drugs to market by, I think, 2 years. And the returns would be spectacular. But how much money do we get out of that customer? £100,000 a year or something, or and they were getting millions at the other end. But we couldn't change it because all our competitors were operating on the same method that we were. So there was no possibility of really making a good return, and it's better to sell the business and look for something else at that point.
Okay. And if we think back just a bit further, perhaps, pre-1990, I mean, in terms of sort of the early jobs that you perhaps had, what sort of sectors were you working in?
I started in accountancy, which
Okay.
I wasn't really very well suited to accountancy. Nobody asked whether I thought I was going to be suitable for accountancy and why I was going to be suitable for accountancy. Anyway, so I started that, and I was demonstrably not set out well for that.
Okay.
But it's incredibly valuable, actually, because although you might not enjoy the job nor get much satisfaction out of it, understanding how accounts work and how you financially account for things is an incredibly valuable skill for later on, because businesses need cash, they need finance, they need to report, and that is a good background. And then I worked for a newsletter which was focused on venture capital and venture capital investments, and I've always been interested in finance, which is why I went into accountancy in the first place. So I know those two things were good in setting me up for later life.
Okay, yeah, indeed. It's one of those things. It's good to know, isn't it? About how to account for things and run management accounts. But actually doing it, I could never imagine myself being an accountant. It would bore me to tears. I struggle to even do my own accounts every month, so it's not my thing. But I mean, let's just talk a little bit about you mentioned there about doing a newsletter. It was for private equity.
It was a series of venture capitals.
Okay, yeah.
So and we sold it the newsletter to investors. Some were venture capital,
Right.
which there weren't many in the 1980s. Um, some were to corporations which were looking to do acquisitions,
Mm.
and some were to private individuals who interested in making
Okay.
small.
So,
And we had some successes, and I wanted to get more involved in individual investments. And the second, from 1990 to 2000, I had a joint venture with a venture capital manager.
okay. Okay. And your first IPO was just after 2000 with the Seabrit company,
Cyber, no,
Cybit.
well, I suppose the correct answer is yes. Although I had been peripherally involved in a couple of other IPOs,
Okay.
so I had some idea what I was doing, and out of our portfolio of 17 investments, I think eight IPO'd.
Okay.
I was pretty proud of our success there.
Yes, indeed. That's quite a few IPOs. I mean, when it comes to IPOing or raising cash, getting venture capital injection, what do you think's the key to attracting good money into a what you think is a good business idea? How do you sort of sell that idea to get the cash?
Well, I think a vision of how the business is going to exploit an opportunity which they can uh, explain to investors is critical.
Mm-hmm.
Uh, the other areas where they really have to be able to be fluent is we are growing at X rate and we are going to grow X rate plus. Why are you going to be able to do that? It is a key thing. And actually, for most early stage businesses, getting new customers who are prepared to spend significant amounts of money with them is the biggest challenge. Um,
Yes, it is the biggest challenge because no one knows who you are, do they? It's not tried and tested. So, yeah, how do you go about it? Do you have to offer sort of discounted rates, almost trials, freebies? But when it's, as you say, if they're trying to sell a product that's very, very expensive, that's a
yeah.
risk that they've got to take on, isn't it? Presumably.
I mean, where I'm really pleased about Acuity, actually,
Mm.
and progress we've made in the last, let's say, 18 months, we've had three um, organizations, one of which is the United Nations. We
Hmm.
started in, I think, 2010 with one small bit of the United Nations. Um, and we're now up to five, and we haven't lost one in that time, and we're getting bigger bits of the
Mm.
United Nations. Um, in a major global broadcasting business, we started off with a contract worth 30,000 a year. Um, within 18 months, we were up to £150,000 a year, and there are further big opportunities for us within that organisation. And then the British government, we started with £50,000
Mm.
contract, and we're probably 10 times that within 2.5 years. I mean, that is where we would expect to be with most of our big new customers who start off with a relatively small contract, and the customer likes it and they expand dramatically. And that is so much easier to sell once you've already got an installation and it's working and the customer feels comfortable with it and they're confident
Hmm.
and they like working with you. It just makes all the difference.
Yes, indeed. And I mean, how do you think Acuity have gone about that then? Because I mean, in terms of you being on the market, it's not so long, but I presume there's a lot of back history with the actual product itself. But I mean, to actually be securing these kind of contracts, that can't be easy, doing it with the British government, because you would imagine that they have these risk management systems in place, tried and tested, that they've been in. They don't. It's a risk in itself to change the risk management provider, presumably. So how do you go about, or how have Acuity gone about getting in with that kind of trial period, if you like, small scale, to then go further down the line and scale up within those entities?
Well, how do we generate leads? I mean, we have been very successful in generating leads, and over the past 3 years, the sales pipeline has grown dramatically. We've gone for some digital marketing, which generates leads. We have promoted ourselves with commentators such as Gartner, where we're rated in the top 3 or 4 companies in the world, the GRC in their user surveys, and that makes a tremendous amount of difference, because not only do you get leads coming to you because you're in the top 3 or 4 in Gartner, but when it comes to converting them, if customers like it, other customers like it, it is not nearly such a leap of faith to buy something from us. And if it's £30,000 a year for 3 years, it's not the end of the world if it doesn't work. Generally, we're selling 40, 50, £100,000 a year contracts now, but where somebody wants a limited contract, we're quite prepared to take it, because we are fairly confident that we'll get extensions, we'll get expansion, and grow within an account.
Okay. And with Acuity then as well, of course, you started off as CEO, didn't you, I think? But then, of course, Kerry Chambers has been brought in to take over that role.
I organised the creation of Drums, which has now changed its name to Acuity RM Group, which was on AIM. And we invested in Acuity, Drums invested in Acuity, and we could see that there was a big opportunity for the enterprise, many times bigger than they had originally thought. And by becoming part of an AIM company, it would help the business to expand, give it a higher profile, bring it to the attention of more potential customers. As a quoted company, we are more like our customers because we've got PLC status.
Mm-hmm.
And one of the reasons to go onto the market is to exploit the business, grow it, and then somebody will come along and say, we would like that. And in our case, I think the reason they'd like to do that is because we've got a really good product, we've got good relations with our customers, and we can demonstrate a business model that shows rapid growth, much more rapid than maybe the acquirer would have if it's a competitor, and if it's a private equity business. They like businesses that are growing strongly and can demonstrate that they've got a business model which could be driven forward by private equity.
Okay, and then what would be so in terms of scaling up Acuity here? I mean, you mentioned that some of the entities you're with, the broadcaster, the government, and indeed. What was the other sector you were in?
United Nations.
Oh, yes, the United Nations. So would be the plan at Acuity to scale into those entities, or are you looking further afield and getting into other organisations such as in a similar sector?
Well, I think your number one and easiest growth is in existing customers. If you've got large organisations, and we're not big in British government. We are tiny in British government.
Okay.
There are other parts of the British government which could use us. I mean, absolutely massive opportunity. I mean, probably with our number one department, we could easily get 1 million a year, and we're doing about 500,000.
Okay.
But that would only be scraping the surface. I mean, probably there's 5 million a year in that one customer, but we must always be looking for other customers to grow, to start and grow. And so the answer is, yeah, we'll grow within our existing customers, but we're looking for other customers. And at the moment, we've got 3 or 4 big opportunities. Whether we'll get them or not, I can't tell you. But of them, there's a US Fortune 500 company, which we don't sell to at the moment. There's an existing German company, which we already supply. And there are a number of other high-profile customers who we could supply and were pitching for.
Okay.
One of the reasons we went into partnerships is that generally the risk management includes an element of consultancy, and our partners are consultants. And every one of the companies operating, selling software into the GRC market, all the big ones are partnered up with the 4 large accountancy firms, big management consultancy businesses like Accenture or whatever. And we've got some really interesting partners now. Since we appointed a partner manager in August 2022, we've developed our relationship with CGI, which is a really enormous global consultancy player, computer services. We've got Logicalis, which is a large consultancy business. We've got several cyber risk consultancies, and one of our drivers currently is to get closer to those consultancies so that we are their number one product to take into their customers when they get opportunities.
How do you, I think, first of all, plan to do this, plan to grow out, but also how do you measure your success? Do you have KPIs that you sort of assess yourself against?
We have KPIs. We obviously got sales target and sales budget, and profit and loss budget, but every salesperson has a target. We, as an organisation, we have overall sales targets. We have targets for our partners. We measure performance against those, and where they're not performing, we put in effort to try and make sure they do perform. And if they can't perform, then we have to take other action. But we're driven very much by setting targets, measuring performance, and doing something if it's not happening. And if it is happening, then we're only too delighted, and we'll do what we can to replicate that in other places.
And how big is a team? I mean, how many salespeople do you have in the company?
We've got about 6.
About 6. Okay. And can you say what their targets are, or not publicly?
I think it would be unfair to say publicly, but to give a guide, a single salesperson, BDM, would be probably expected to do £750,000 roughly of new business in a year, but some of them are new. I mean, we've been
Mm.
expanding. So last year we had um, really three, and
Mm.
then there is also work to renew deals. So one of our salespeople specialises in keeping the existing portfolio happy and making sure that they um, will renew and so on.
Okay, indeed. So, if we were to perhaps go through some of the things that perhaps the company is looking at doing. I mean, just from my list, and you can maybe tell me if I've got this right or whether you want to add or take away certain things. But I would say that you've got to focus there on renewing deals as you just mentioned, growing sales, of course, okay, through the targets there with the salespeople. I would guess as well growing the team, so getting more salespeople. But I wouldn't know to what extent you would want to grow the team too. But also, I'm guessing as well you want to break into a new sectors and b new jurisdictions as well. Not just the United Kingdom.
Correct. So the the first three of your
Yeah.
points, the renewal, the
Hmm.
growth of existing customers, and winning new customers, and growing the team, they're all very interconnected. I mean, we have to be able to, if we're successful at renewals, we should also be successful at growing the accounts and also growing into new accounts.
Hmm.
But you're absolutely right. Look, our number one area is to break into the States if we can do. We've got probably about a dozen customers in the States, and we would hope to probably grow that by more than 50% in 2024.
Hmm.
And we've got about 10 customers in Germany. We're not quite so focused on Germany, although there are a number of things which we've been doing, which might include winning a new partner who would be able to help us in the German market. We've been quite successful in the German market, and we have some interesting industrial customers in German market. Where we've got reference customers is very helpful to get further customers, and quite often they will refer new business to us. So our biggest sector in the States is the financial sector, which
Hmm.
is a good sector. And it's great for, they're always very keen on risk management and that sort of thing. Is the States financial sector is much bigger than our efforts in the financial sector in the UK, although for reasons which have come about fairly recently, we've got a bit more expertise in the financial sector, and we think we can probably grow our presence in the financial sector in the UK. We are better
Mm.
at finding a medium-sized financial business and supplying it. They are more open to going with a lesser known supplier than the largest ones, who are very conservative. They tend to be very conservative. And also the risk management has been a real area of activity in the UK for the last 20 years, or maybe, and of course, exacerbated by things like the financial crisis. Oh, risk, we must manage our risks. And cyber risk, oh, goodness me, that's a terrible thing. So how they do it may not be the way that we would would be able to offer. But in the States, there's probably much more opportunity. So the answer is yes, we'll go into new sectors, and particularly those where we've already got a bit of presence. And then secondly, we are going into new territories or trying to develop in territories where we've got a toehold at the moment.
Okay. And if we just to finish off, Angus, thinking about the investors, the shareholders in the company here, I know you've talked before about sort of the importance of getting investors on board, but I think also keeping them informed. What is it that, I don't know, I mean, you can either give a message to shareholders, or if I ask you perhaps what you want to deliver for shareholders, and also keeping them informed and interested in the story. I mean, you mentioned earlier about sort of that vision, selling the vision to your employees, but creating a vision for the company. I think shareholders really like to share that vision as well. So if you were to perhaps articulate what the vision is, what you want to achieve for shareholders, and why, because at risk management, it's not the most exciting perhaps sector. It's not going and looking for gold or discovering the next penicillin. How do you keep investors interested and enticed in the story?
The easy answer to that is you've got to keep telling them about achievements of the business and what it's achieved. So new contract wins, regular news about what we're doing, why we're doing it. In 2023, strengthened the management team with a new technical director, a new finance director, and more investment in sales and marketing. People need to see that something's happening. Why people invest in us is because they think they're going to get a decent return on their money. We've got to make announcements about why they're going to get a decent return on their money. So it's to do with business wins, things we're doing in the market, which are going to grow acuity faster, better, make it more valuable than it is at the moment, and that we are able to get that news out so that investors who are interested in generate real returns can see what we're doing, can compare us against other things, and they can select us as an investment.
Okay. Well, thank you very much for your time today, Angus, doing this podcast. It's been very nice to learn about where you've come from and some of the things you've been involved in the past, and also get a bit of an idea of the vision for Acuity there and some of the KPIs that you'll be judged on. Fair to say that you're excited for 2024, hoping for some material developments in the company?
I think 23 was a year when we put in place the steps for transformational growth. 24 is when we've got to start demonstrating that we are growing really strongly.
Okay. Well, I look forward
that we'll make a good go of that. I mean, you can look at the things like the sales pipeline. You can see that we've grown that, and it takes time. But you've got to start off with opportunities, and then you can convert them.
Indeed. Well, I look forward to following that story throughout the course of the year, Angus. But thank you very much for your time on the podcast today.
Thanks, Mark. Okay.
Thank you for listening to another podcast from Market Musings. Tune in next time.